Ladies and gentlemen, Greg Michalowski from ForexLive.com. I'm going to take a Forex quick look take a look at the dollar versus yen as we head into the new trading week starting June 5th, 2023. So let's get started. I'm going to focus first here on the daily chart. If we go back in time and we take a look at this area right through here where the price base before moving to the upside. Here we came back down and retested that area, kind of solidifying this area as support before moving up to the high price. When the market came back down, we found support against this level, got a little messy through here, but then reestablished resistance right through here and didn't return to that level until, well, last week and this week, when the market came back up to the swing area, moved above it at the end of last week, early this week, before rotating back to the downside and trading here today. We moved back into that swing area, helped by the better than expected US jobs report. Also in play is the 50% retracement. That is of the move down from this high right here to this low right here. The 50% retracement comes in at 139.57, and the price moved above that level and trading here today and into this swing area, which by the way goes from 139.089 to 140.296. So in trading next week, if the price is able to get above the 140.29.6, we're going to see if we can do better than we did right here, where the market broke above those levels and failed. So watch that level 142.96 on the top side and early trading next week. That's on the daily chart. On the downside for this chart, we're going to be watching the 139.57 level, 50% retracement level as a barometer once again. And again, the sellers had their shot as well below the 50% retracement and couldn't sustain it. So had the shot above, had the shot below, and we're trading in between what is resistance above at 140.29 and what is support below at 139.57. Now let's take a closer look at the hourly chart. And what I like about the hourly chart is you see these two moving averages that are converged right here. Where do those moving averages converge at? 139.58. What was that 50% retracement level on the daily chart? 139.574. I have it outlined right here. And you can see that the 100 and 200 hour moving average and the 50% retracement off the daily chart is both at the same level. So all three of those technical levels, there's convergence of technical levels at the same point. That increases that level's importance for from a technical perspective for buyers and sellers. Buyers know that if the price can remain above that level, the bias remains more to the upside. Sellers know that if the price moves below that level, the sellers are more in control. So that's going to be our key barometer in trading next week. Simple as that. If the price can stay above, it's more bullish. And right now we are trading above that level. The next target would probably be just go back and look at our swing highs from this week's trading and last week, I guess. We'll start at 140.23, and then we'll go to this little high right here, which is probably somewhere around the 30 level or thereabouts. And then we start to look toward the double top up here at 149.26. That level was our high price. I think it was last Friday and again on Monday. Actually, it was Monday and Tuesday. So the inability to get above that level is going to increase that level's importance going forward as well. On the downside, if we break below the 100 and 200 hour moving average and the 50% retracement level, may not be as supportive down here near this swing area down here, but we will see 138.73 to 138.897. We did have this level was a resistance level through here, forming a ceiling, broke above the ceiling, used this level of support, came down to it here, got messy through here in front of the unemployment report, but after the unemployment report, the market came down to a level and found support buyers against it and moved higher. So we got to get below the 138.73 level, and I think the buyers would head down toward the 38.2% retracement of the move up from the May low to the high that we saw in May, and that would be at 138.086. But for right now, the buyers remain in control in the dollar versus yen with a try support level defined by the 100 200 hour moving average of 50% retracement on the daily chart, acting as support near the 139.58 level. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.